Hello. Hopefully you enjoyed a fantastic Christmas. You're enjoying a great holiday season, and it's just a wonderful time of year for you. I thought I'd do a quick live today and just quickly touch base on a Wall Street Journal article from, I think it was yesterday. And the title of the Wall Street Journal article is The New Math of Homeownership. And what it talks about is the rising cost of homeowners insurance and taxes. And that the rising cost of homeowners insurance and taxes is starting to be a barrier to home ownership and is also starting to deteriorate people's ability to maintain their homes. Really interesting article, had a bunch of statistics. I just want to share them with you for a minute. First, let me give you a peek at what the article looks like. Here you go. This is what the article looks like. You may or may not be able to access it in the Wall Street Journal. I will put a link to it down in my notes below. And of course, always go to my LinkedIn where I do a summary of the articles I cover here with links directly to those articles. Okay, so that's what it looks like. Let's go back here. Now let me share some statistics with you, really interesting, and then I'll show you a little chart. Matter of fact, I'm going to start by showing you the chart because I think it's pretty dang interesting. This is what the cost of insurance and taxes, how it's risen over the last 10 years. That's right, it's gone. Now this chart is deceptive because it's only a partial, but you see where it's gone from 29% of the overall payment on average was taxes and insurance, and now it's over 33%. And that's starting to put a strain on households, as we can imagine. So let me go back here. So here's the statistics. So 32% of the average single-family mortgage payment in this year went towards property taxes and home insurance. As we know, that's only increasing. And it was really interesting, 9% of homeowners today, over half their housing payment goes to taxes and insurance. So 9% people, 50% of their housing payments for taxes and insurance. And not surprisingly, but alarmingly, 6.8% of homeowners reported going without home insurance. So they had, and that, of course, they'd have to have no mortgage to be able to go without home insurance, but no home insurance for almost 7% of homeowners. And in places like Miami, high cost places, over 21% of homeowners do not have insurance in Miami. That just seems risky to me. But these are interesting numbers. And here's another interesting number from the article. Between mid-2022 to mid-2023, nearly 149,000 mortgages became delinquent as a result of challenges affording the mortgage and tax payments. Is that interesting? So those are some interesting statistics here. And by the way, all this data, not the data on the non-insurance, but the data on the costs of taxes and insurance as a proportion of the cost of ownership, comes from ICE, from their data on impound accounts. So it's a pretty good subset. It's pretty accurate data. Tells us about a third of people's mortgage housing payment right now is taxes and insurance, and that of course is only going up. Roughly 7% of people in the United States don't have homeowners insurance. Nearly 10% of the United States, half their housing costs is mortgages and insurance. And of course, this affects the elderly the most on fixed incomes because as taxes and insurance increases, even if their house is paid free and clear, it still puts a strain on their fixed budget, which is a challenge. Now, the reason why I bring this up is just my continuing encouragement for all of us to stay in contact with our past clients, to get into a relationship with homeowners, to help serve them, because we can help them. We can guide them. We can give them some tools. We can give them some solutions to free up cash flow so they might be able to better, afford taxes and insurance. So and seniors, and we can lead them to a reverse mortgage, create some cash flow for them to make taxes and insurance more affordable. All sorts of options. So, stay close. It's another topic to touch your past clients with, bringing value, supporting a lifetime relationship, which I am all for. I will put a link to this below, as I mentioned. I also mentioned check out my other socials, particularly LinkedIn. I do a lot of summary work on LinkedIn, and if you can't access the article, it depends. It's behind a firewall, but you get so many articles a month. If you can't access it, you can always just get the summary points from my LinkedIn post on that. And with that, I hope you're having a great day after Christmas. Thanks for spending a little bit of time with me today. I look forward to talking with you again tomorrow. Thanks so much. Have a great day.